If you see it in my face, you know it's Tax Tuesday. Okay. Calm down. Everybody's excited about Tax Tuesday. I know. It's gonna let you guys settle down. In today's video, I'm going to break down gross income for you guys. The IRS breaks it down into two different categories, earned income and unearned income. So it's two different things that we're going to be talking about there. Also, we're going to talk about once you figured out if you got unearned income or earned income, we're going to figure out if you are you need to file your 1040. After that, we're going to go and see if you are required to file a 1040 because you meet a certain criteria of how much money you made in a year, depending if it's unearned or earned income. So I'm gonna just go a few numbers, then they're not gonna be updated if you're watching this video a couple of years from now. Welcome to SimpleChew. I'm your host, Hank. I'm your typical awkward-born accountant. I've been doing this for the past 10 years. Also run a resale business on the side for the past 5 years. And if you've been following me for this long, thank you very much. Every like you give this video, any of my other videos is going to be rich vibes going to your way. So don't forget to like. Also, if you're new to my channel, welcome. I suggest you to subscribe and also hit the thumb bell so you don't miss any of my videos. I've been posted every Mondays, Tuesdays, Wednesdays, and Fridays. And I usually talk about financial education, also resale education, and also taxes like this. I also have an ebook free of charge for you guys. It's about how to invest 101. I break it down really easy for you guys. It's free for you guys. You just have to go to www.simplechew.com and I have a description in the bottom for you guys. So really simple to break down the gross income, the threshold. Earned income, that's the first category of the gross income part, is any salaries, wages, tips that you're earning. It's basically that you're actually putting some work, you're working, you're busting your butt and you make some money. Any taxable income, any taxable scholarships or fellowship or grants, those are going to be all included in your earned income because you work for those. You had to make a huge essay, you had to go through interview probably, so you work for it essentially. If you had to sweat and your hands hurt because you had to write some scholarships or something, it's gonna be considered, that money is gonna be considered earned income. On the other side, earned income, that's for the people in the coronavirus crisis now that we're hitting. For people who are in unemployment and they receive unemployment checks, they can be considered unearned because they're not sweating, they just probably just chilling in the house, watching some Netflix or something. So hey, I'm not hating. Well, I'm hitting a little bit, but also people who had taxable Social Security, people who are retire or they're receiving disability checks. Some of those checks you have to make sure that they don't have taxable income in there. Also, any taxable pensions, it's mostly for people who are retired. They're gonna be in the category of unearned, or any canceled debt. Maybe there's something that a lot of people don't remember. Once you talk to one of those companies and they cancel your debt, that money is unearned because somebody fought for you that money and you don't have to pay that debt that you use for a nice vacation or something. I feel I want to do that too, but any taxable interest or dividends and capital gains, that's for the people who are investors and they don't want to, they put in the money to work. The money is working, but the person is not working, so that's going to be considered unearned income. And that's also important to keep it different into two different categories. You don't want to mix them. It's important to keep it separate. Now we're going to go jump in the gross income threshold. So if you are making more money or you're at this amount, you'll have to fill a 1040 at the end of the year. You'll be filing single and you're younger than 65, 12,200 is your threshold. So if you're making 12,200 or more, you're gonna have to be filing a 1090. If you're 65 or older, the threshold is 13,850 of gross income. For the people who are married and they're filing jointly, if you're both younger than 65, the threshold is 24,400. So if you make more than that, or you're making that or more, you have to do the 1040 at the end of the day. So I know if you're 65 or older, one spouse is 25,700. If both of you are 65 or older, the threshold is a little more higher, 27,000. So if you're making 27,000 or higher, you have to do the 1040. Now for the folks who are married but they want to file separately, they don't want to trust their spouse, and that's cool. Maybe it works out for that year. Any age, it doesn't matter any age, is $5. Just remember that. For head of household, if you're younger than 65, the threshold is 18,350. This is just for 2019. This could change in the future. So if you're making that much, you have to file 1040. If you're younger than 65 and you're filing head of household, it's 20,000. And now for the end one, the last one, and the most saddest one, the qualifying widow. If you're younger than 65, the threshold is 24,400, and if you're 65 or older, it's 25,700. All right, we're making good progress. Hopefully the class will awake and not falling asleep. But now we're gonna move on. If you had dependents, there's gonna be a special case where your dependent might have to file taxes, because on a gross income threshold, some dependents can be making some earned income, or they can be making unearned income, because you might buy them a trust, or you might buy them some bonds, and they might be earning some money from that. If you have that situation, I would suggest you to send me a message and I can explain to you better. I don't want to confuse everybody in this video if you have dependents, because not a lot of people are having dependent on their 1040s. It's like almost a special case if you have a dependent and they have to file also taxes. That could be trickier for this video. The IRS gives you a huge list of situations where you have to pay taxes or you have to file a return, and I'm not gonna go over it in this video because it's literally this thick, and I don't want to bore you guys with all that information, and a lot of it is not gonna be applied to you. A lot of it is just taxes that probably you didn't pay, they had to pay, or you receive any interest, or you receive any health insurance premiums and or any advances, health care advances. So it could get really difficult. All right, now that we're having so much fun with this taxes, so form 1040, you can attach some forms, so you can attach some schedules behind it depending on your situation that I want to go a little deep in. I'm just going to give you what they are, where are the schedules out there, and why you might need them. And the first one is the most easy, is the Schedule A, and that's the itemized deductions. That is for people. So this itemized deduction, the standard deduction, I want to say like 90% of all taxpayers who have to file a 1040 will use a standard deduction, either because it's more than the itemized deduction, which is mostly the case, or they don't want to go through the itemized deduction list because it's too hard or whatever, or you have to pay your accountant more money or whatever, so you take the easy route, which is fine. But at the end of the day, if you have an accountant, he has to go through with you the itemized. And the itemized is just, if you have a house, I recommend you going and taking a look at the itemized deduction. Maybe that works better for you if you pay interest, you make any repairs to your house and stuff like that. If you have a mortgage and you pay interest. Also, if you have some medical expenses, you had to pay out of pocket, super beneficial if you go and check the itemized. And the list can keep going on that. If you pay taxes, tax advance, you were job hunting and you pay fees to find a new job, you might be able to put it on your itemized. If you have a specific job that is like special uniforms that you have to buy from a special company or a special store, those might be able to put them under your itemized deduction. So a lot of people who come to my office, they're like, oh, I pay for a uniform or something, but they're taking the standard deduction. So, but they don't want to look at the itemized, and then once we go to the itemized, it doesn't match, or it's not even more than the standard deduction, so which doesn't make sense. The second and the most important one is the Schedule B. This is everybody like me out there who are investors. That is the interest and ordinary dividends. If you're getting any dividends from your investments that are not included, that are not in your IRA, not in 1K, it's just your personal account, you have to submit a Schedule B. If you're using like Robinhood, they will send you 99 where it tells you all the dividends. It's a 1099 dash dividends or DIV, and they're gonna tell you how much you made. So there is a threshold if you had any qualifying dividends or any taxable interest or dividend earned, and that's 1,500. So if you make over that, you have to put a Schedule B. If you made like $10, you don't have to do that. All right, so now we're gonna go move into Schedule D, and that one is the capital gains or capital loss. So if you are a day trader, I get a lot of this question from day traders who are selling and buying quickly, usually a couple times a day. They make a couple of dollars here, a couple of dollars over there, sometimes a lot of money. Some of them, they have to pay capital gains, but they also have to have control of the losses. And if you're using Robinhood, but you're not really a day trader, but let's say you trade in like a couple of times a month and you are having capital gains on that, Robinhood does pretty good on keeping track for you. But it's also important for you to keep your own accounting, especially if you're dealing with stock and then you're dealing with taxes on top, because you don't want to mess with the IRS. Trust me. Thank you guys for watching. Whew. That was difficult. I can tell you right now. I don't know the people who are really into taxes, but hopefully you guys learn a little bit the difference between gross income. You have to separate it between earned income and unearned income. That's pretty standard. And then we went on the criteria of what qualifies you to have to file a 1040, and I give you the numbers for that. We went all over the schedules. We went really deep in it. And if you have any questions, let me know. If you want more deeper understanding, if you're on your specific situation, let me know. Send me an email or send me a message below, and I will happily answer it for you guys. Always remember, guys, keep it simple.